Emefiele would have about 4 to 5 yeyears tenure.
5 years.
5 years.
Not quite, yes.
5 years, to spend in office. But looking at the short-term decision of the central bank, because of the monetary policy committee right now, I wanted to just stick to the fact that the cash reserve requirement that we're talking about has to do with government agencies, federal government deposit. I think there is this kind of fear that if you relax the hold on this rates, the cash reserve requirement now, it can create inflation in the economy and, of course, some kind of imbalance.
Yeah, you asked me a question. You said that they did this, how all the steps they're taken since the last meeting. And then we're saying that what is it? What's the effect? What's its effect on ground? What are we seeing? And then you find that they still tell you that we have excess liquidity in the system. And I don't want to be seen to be, I want to give central bank the benefit of the doubt, to say that central bank has all the facts. But if we're doing all this and we're still talking about excess liquidity, and you have excess liquidity within the system, and you're saying, where does it manifest? The only place where it manifests are fixed income instruments. That's where, for instance, the yields, showed some softening. All right. So it's not. If you have excess liquidity within the system, one would expect that interest rates will crash. All right. But this has not happened. If you did business in this economy and you went to a bank to get some money, you have to be. You're talking of paying at the rate of 27% interest rate, which is not. You cannot do real sector business with such rates of interest.
So I think that if the committee actually loosens its grip on the key rate of 12%, perhaps lending to the real sector would.
Yes. What I'm saying is that I would expect that when Emefiele comes, a little bit of more balancing should be done. Yeah, because you can also fight inflation by trying to stimulate. Let's say we want to stimulate the economy. A bit of inflation. We just the American the Reserve Bank did it. The quantitative easing was just putting money into the system. Oh, okay, so we need to maybe try a bit of that. Because I find that this phobia, about inflation, has been the cause of harm. And if we've done that over 2-3 years, and we're still in this position, there are certain things, there are certain no-go areas. For instance, we must not, as far as I'm concerned, I said to some people, we must not try devaluation of the naira. All right, there are issues with managing the naira. Maybe we're going to discuss that if we still have the time. Managing the naira, there are other issues there. You have round tripping, you have money laundering, you have bureau de change activities. The CBN at some point in time did say that central bank should go in there and operate as just any other player within the market that would supply foreign exchange and buy foreign exchange.
All right. Now, there are reports that the Nigerian economy remains vulnerable to global shocks due to increased exposure to short-term capital, rising external debt, and high demand pressure that have resulted in the depletion of the external reserves by 2.9%. What do you think should be the position of the Monetary Policy Committee when it meets? And considering the activities in the global markets and Nigeria's tie to developed economies in terms of having to protect our economy from risks and shocks, what do you think should be the position
of the central bank? Well, I think that if we are talking of the position, what the central bank should do in terms of money, if we're talking of hot money coming into the economy, yes, there are issues there. But then I thought we've really gone beyond that. The time we had some uncertainties and people were scared, and monies went out of the economy. That time had gone. And at some point in time, what really caused money to leave this economy was the fact that the quantitative easing was being relaxed, and so it became more attractive, to go outside and invest. Okay, so I think I missed what was the other.
What do you think should be the position of the committee? Because we're looking at not just hot money, like you termed it.
Yes.
We're also looking at rising external debt.
Yes.
High demand pressure, especially exchange rate.
Well, it's a position of the committee. If one talks about rising external debt, I don't think that is something that you want to tackle. That's like more of physical policy, more or less. And to some extent, yes, if you have rising external debt, and so on and so forth, that it becomes a problem for central bank when the time comes for you to meet up your obligations, and so you're going to pay, and it goes through the system. But then when it's not so, that's a fiscal responsibility. And we have an act that says you shouldn't go beyond 3%, of your GDP. And I expect that we're coming to that. So rising external debts, for me, would not really be of concern.
All right. We talked about the issue of capital inflows, hot monies that actually, came into the economy and now somehow finding the way out of the economy because of the conducive environment of developed economies. Let's just take it up from there. The quantitative easing program of the U.S. Fed has, been relaxed a bit. Of course, extended in a way because the Fed chief, Janet Yellen, was of the view that, okay, there will be no abrupt stop to this program, but we do it on a gradual basis. How has that impacted our economy in terms of capital inflows and investors who were coming to invest into the Nigerian economy?
Well, I respect that, like you did rightly observed, you will find that the quantitative easing, what it's done is that it's made instruments in America, in their stock market, the returns are now a bit enhanced. And so to that extent, if you do risk return analysis. So it became profitable for them to now say, look, this instruments, this investment we made in Nigeria, because we saw better opportunity of yield opportunity in Nigeria. Now we are in the position to say, look, take this money back to our place, and then we avoid the risk, because there's risk in this environment. We've not even touched the fact that we have this insurrection, that the whole world attention is focused on Nigeria. It makes it, when you're talking about attracting foreign investors, you're going to an economy and you say, look, to what extent, what are the risk factors in this economy? And one of the risk factors you have in Nigeria is the fact that you have this insurrection. You have bombs are now going off everywhere and people are being killed everywhere. And so that enhances the risk factor. And that would mean that to that extent that if I'm going to go to Nigeria, I'll say to myself, look, this place is not stable.
Well,